Hey, welcome to Socialism for All. Today's date is March 1st, 2022, and today we're going to be talking about the possibility of a gigantic 2008 style financial crash. If you like this video, please click like and subscribe and consider supporting on Patreon at patreon.com/socialismforall. There's a link to Patreon in the video description. So let's talk about financial crashes, capitalism, and the kind of geopolitical instability that accompanies all this, particularly world wars. As Marxists, we know that capitalism has built-in economic crises that it just simply cannot overcome, even with regulations. The regulations, when they are in effect, and we're in kind of a deregulated financial environment now compared to previous decades, they can take some of the sting and bounce out of the ups and downs that are inherent to capitalism. But again, they can't eradicate them entirely. You need socialism for that. So, speaking of, we're now about 3 decades out from the destruction of the Soviet Union and the collapse of the entire system that was basically all throughout the Soviet Union and Eastern Europe. And in the wake of that, capitalists, imperialists in places like the United States and Europe basically said, oh, we have a unipolar world now. There's no, organized revolutionary proletariat fighting for socialism, and we can just kind of do whatever we want. This is where ultimately the war on terror came out of a decade later, but also during this transitional time period for imperialism, some financial deregulation, pieces of law were passed. And the 2008 crash, the first gigantic international massive, meltdown of capitalism, was the result of this, and it really didn't take long. Everywhere that capitalism was firmly established was really rocked by this going into the early 2010s. Of course, there was a sort of recovery, but not for everyone. So as, the millionaires and billionaires did better, more people were ruined. This is a process we call proletarianization, where the middle classes get ruined. And increasingly, you get big capitalists, the top 1%, and the 1% of 1%, and all that kind of stuff. But, the middle classes, the small business owners, petty bourgeoisie, a few of them happen to get lucky and wind up in the big bourgeoisie, the 1%. But most of them wind up in the proletariat. They get, they lose their capital. So they become proletarians again. So this process continued, and all of the golden age of social democracy from the 1930s to the 1970s, which then came under open attack in the 70s and 80s. Well, neoliberalism was the name of that attack, and basically neoliberalism is a return to, full unregulated free market stuff. It's basically re-liberalizing. Not that the 30s through 70s were not liberal, not that it wasn't a free market, but neoliberalism is like really trying to strip out all the regulations, going back to like old school pre-social democratic type capitalism. Unregulated, basically deregulate the private sector, defund the public sector, and privatize the public sector. That's pretty much the slogan of neoliberalism. So anyway, into the 2010s, you get kind of a stabilization. This is again the boom-bust cycle of capitalism. After global financial meltdown, there's a sort of recovery, but it's benefiting fewer and fewer people because as you just run capitalism in a society, it creates wealth inequality. That's just the nature of capitalism. And so then we wind up in the late 2010s, fresh for another, bust part of the boom and bust cycle. So you also have COVID breaking out at the end of 2019, early 2020, and for a brief moment, the market takes a hit. Look at basically any financial chart of anything. You'll see the beginnings of a major crash in spring of 2020, and then the line starts going back up again. It doesn't really make a whole lot of sense, but it starts going up again. Because why? Because post-2008, no, they didn't really sufficiently re-regulate or anything like that. I mean, they put on some regulations, but not the way that it was before. They weren't like, ooh, this mistake was, we got to go back to the 90s style stuff, or maybe even, no, they didn't do that. So what they did do is they started using more reserves and other financial tools that just were not done previously to try to stave off a 2008. However, what we're going to look at is maybe it's coming anyway because there's just only so long that you can run away with it. Now, a piece I'd like to add to this is as I record this, there is the beginnings, I would say, of a major inter-imperialist conflict between the EU and NATO on one side and Russia on the other. Of course, Ukraine is sort of the first, well, you could say Georgia back in 2008 was an earlier battleground, but Ukraine is sort of another early battleground. That could, in my opinion, combined with other economic crises, definitely feed into another, World War I type of scenario. The Bolshevik Revolution of 1917 bought the working class a fair amount of peace. It disrupted some of those capitalist imperialist processes. We still had World War II, arguably in part that was an anti-communist war, but also, from just pieces set in motion by the First World War. But then after 1945, there was a long period of stability in terms of, you had the Cold War, but the inter-imperialist hot wars tearing up Europe and things, that wasn't quite the same, so that stabilized. Then when the Soviet Union goes in the early 90s, there had been U.S. interventions prior, Korea, Vietnam, but in terms of the largest economies on Earth clashing directly with each other in open mass conflict, possibly involving, nuclear weapons, we got a break from that for a long time. Then, after the demise of the Soviet Union, early 90s, the pieces start to reassemble of that old capitalist order prior to the socialist disruption. This is why we need to rebuild the socialist movement so that the international revolutionary proletariat can be a player here again and resume the struggle to move the entire economy forward into socialism out of capitalism. Because this is what it does. The imperialist powers that are dividing up, who's going to rule which sections of the world for profit, who's going to be able to exploit which other countries. That's just something that imperialists do. Their economic system requires it. And now that Russia is capitalist again, no more socialist Soviet Union, they are rebuilding their economy, and it's just going by the same logic that capitalism always goes on, and that the NATO, EU, US countries have been running on this whole time. So throw in an economic crash, and capitalists get even more desperate for shoring up those profits and, trying to staunch the wounds of their just frankly insufficient system. Capitalism was the way to get out of feudalism, and it built the basis of an industrial economy. It also changed society so that people became proletarians, wage workers who don't own capital. But basically, it laid the foundations for its own demise. This is the Marxist theory within historical materialism, that capitalism basically creates the conditions for its own destruction by creating a vast class of people, the proletariat, who have no interest in private property, for industry to be held as private property, industry which requires hundreds and thousands of people to operate it, shouldn't be held as private property. It should be held collectively. That is actually what makes sense. And those are the material interests of the class of people created by the capitalists who own private property. But, this whole thing, class society, where one class oppresses other classes, it's a moving target. It changes over time as technology develops. So now we're in the 21st century, 2022, as I'm recording this, and we're in late stage capitalism. The proletariat is here. There's not really a peasantry. Socialism is overdue. And if we keep having crashes like 2008, like the one that almost happened in 2020 and may end up happening in 2022 or 2023, because, they're able to buy a few years by some emergency measures, but, they're treating the pandemic like it's over now. It's really not. In the United States, cases are basically where they were at the peak of last winter. They've come down from the new peak of 1.5 million cases a day, but It's far from over, yet they're treating it like it is, and the whole thing is very eerie, very surreal, and I think that this is foreshadowing a major conflict. All right, so all that said, let's get into the article now. This is from Business Insider, and the title of the article is, "We Really Did Hit Peak Stupid. Elite investors on Wall Street say privately that the market is about to undergo a cataclysmic shift, and many won't survive the washout." This is by Lynette Lopez, February 21st, 2022. Every once in a while on Wall Street, there is what is called a washout, a cataclysmic shift in the market that swaths of the investment community do not survive. Wall Street is standing on the edge of such an event, so if you want your billionaire tears, you shall have them. Why now? Well, after more than a decade of keeping interest rates near zero, the Federal Reserve is all but assured to raise them multiple times in the coming year to fight inflation. In the world of finance, these hikes are akin to messing with the Earth's gravity. Assets that were once attractive, companies that used cheap capital to grow rapidly without making a profit, will be shunned. Some of the investors who ate up those growth stories will go out of business. This is not a drill, it's the beginning of a bear market. And based on conversations with some of the most elite investors on Wall Street, it's clear that this drop isn't a months-long process. It'll take a year or more. Quote, "I think there's going to be a few people who've really gone over their skis and will get hurt badly," one billionaire value investor told me. Silly season's over, folks. Before the pandemic, the most pressing problem for central banks around the world was the meandering recovery from the financial crisis. Growth was sluggish, and inflation was well short of their target, prompting the Fed and others to keep interest rates historically low to encourage banks to give out loans and juice the economy. A side effect of making money easy to borrow was that all kinds of garbage ideas could get funding, and all kinds of garbage companies could stay in business. Combine that with lax corporate law enforcement, that's what I was talking about, deregulation in part, and you have Wall Street without consequences. Investors were champing at the bit to pile into companies that used fantastical metrics, like WeWork, and lapped up every utterance from billionaire CEOs who promised flashy technology but consistently underdelivered, like, say, Elon Musk. And that was before the millions of bored, homebound Americans jumped into the market via Robinhood and other trading apps. Armed with their pandemic-era stimulus checks, they bought crypto, piled into blank check companies called SPACs, or Special Purpose Acquisition Companies, and joined message boards claiming that stocks like AMC and GameStop were going to the moon. Awash with capital, companies, especially in tech, saw their valuations leave Earth's atmosphere and make a home somewhere on Saturn. Short sellers were culled. Value investors went into hiding. Quote, "We really did hit peak stupid, but peak stupid extended beyond truly stupid, and then we went to bottom of the ocean rare earth metal companies stupid," the value investor told me. This is the kind of bubble a financial professional should see forming, one where investors lose sight of fundamentals like profitability and cash flow, and embrace a kind of Beanie Baby zeitgeist. In fairness, on Wall Street you can make a lot of money dancing to the music at a bubble party, or you can stand by the snacks and watch. What you cannot do is pretend that the music will never stop. Never get high on your own supply. The pandemic handed central banks a different economic problem: inflation, a result of paper-thin supply chains, a lack of workers, and everyone's new habit of online shopping. The Federal Reserve's goal is to keep inflation humming around 2%, and in the years following the financial crisis, the U.S. economy consistently failed to reach that benchmark. Now, thanks to the pandemic, inflation is coming in above 7%. Quick comment there, prices on some things are much higher. For example, housing prices went up about 30% last year alone. The Fed's playbook to fight inflation is to pour a little cold water on the economy in the form of interest rate hikes. That means debt gets more expensive to pay down, and investors start taking a closer look at how companies generate cold hard cash, not in 10 years, but over the next several quarters. Now is the time for companies to get their financial houses in order because this shift is happening fast. If they can't, Well, we know what happened to pets.com. Quote, people got really sold on story stocks, one short seller told me. Quote, we treated fundamentals like some kind of boomer afterthought, but when the bubble pops, all you have left are fundamentals, unquote. That means that all those hot meme stocks, SPACs, and growth stories need to prove their current business is worth those sky-high valuations, or they will be washed out with the market rout. Take, for instance, the most recent class of hot companies to go public. The last few years saw record-breaking M&A activity, as companies rushed to hit the stock exchanges while investors were pliant. But the short seller predicted that that cohort of IPOs would, quote, dramatically underperform the market. Companies like Coinbase, down almost 25% year to date, Robinhood, down 35%, Beyond Meat, down 19%, and DoorDash, down 32%, were hot when they went public, but now face a reckoning. Even the granddaddy of growth over everything stocks, Tesla, is down almost 30% this year. And those SPACs, because of their special regulatory status, the companies these investment vehicles take public receive less scrutiny than companies going through typical IPOs. That lax oversight and the historic rush of companies going public via the SPAC process over the past 3 years likely means that there is a buffet of low-quality or downright scammy companies for fraud finders to investigate now, the short seller said. Obviously, some big money has been pushing these stocks, not just the bored Reddit-inhaling day traders who were wooed by meme stocks. And the sillier the growth stocks or bust bubble got, the more convinced even the most seasoned investors became of their positions. Quote, what we're seeing here is a removal of liquidity, one hedge fund manager based in Pennsylvania told me. Quote, the volatility will exist until all these guys are out of business, unquote. To this investor, and to many on Wall Street who clung to the religion of healthy balance sheets during this bubble, there is a sense of schadenfreude about what's going to happen to those who helped to inflate the bubble. When I called him during a recent market rout, he was out doing work around his farm. Quote, I'm in CVS and Occidental Petroleum, he said as he explained why the market beating didn't worry him. Quote, who cares if a bunch of garbage stocks fall out of the sky? Unquote. Investors like Cathie Wood, perhaps the most starry-eyed of all the investors betting on moonshot, at best technology, who've caught fire during this bubble, will soon come to find that precious few are interested in a stock that might quadruple in 5 years, if it can't show how it will generate the cash to fund its business until then. Wood's ARK Innovation ETF made a truckload of money for investors in 2020, until its peak in early February 2021. Yes, during all the meme stock insanity. But since then, Wood's ETF has cratered, losing about half its value from its peak to its current trough. And it's not just a few TV regular investors who are going to be swept away by the market's washout. Billions of dollars are being put to work on ridiculous fads all over the country, from small wealth management firms to storied hedge funds. Quote, there's a bunch of Cathie Woods out there who just aren't on TV every day, the value investor said. I would put Tiger Global on the list, unquote. In the past few years, some hedge funds have thrown away, well, hedging, in favor of turning their funds into venture capital firms. Tiger Global is one of those firms, known for aggressively courting startups and jacking up their valuations to astronomical prices. Jamie Powell, writing in the Financial Times, whimsically called it pay and spray. As the Nasdaq falls, it is pulling down private startup valuations with it. In other words, we have a long way to fall, but this isn't 2008, when the collapse of the economy pulled the stock market down. This time the problem is the stock market and its unrealistic valuations. Wall Street got high on its own supply, and now it's time for a come down. There is no white knight. In the old economy, there was the Powell put, a shorthand for the belief among investors that Daddy Powell, the internet's creepy shorthand for Federal Reserve Chairman Jerome Powell, would let the stock market fall only so far before he made the Fed step in. This idea was calcified when the Fed came to the rescue after a sharp sell-off at the end of 2018 into early 2019. As a result, there are some in hedge fund land who do not believe that Powell has the stomach to hike rates to the point that inflation is tamed. In a January note to clients, Mark Spiegel, the founder of Stanfill Capital, wrote that rising rates may lead to government budget cuts as the federal debt becomes more onerous to pay. Because of that, he mused, the Federal Reserve won't move interest rates as high as needed to fully rein in inflation. Such a dramatic series of hikes could force politically painful cuts to the federal budget. Quote, Powell doesn't have the guts for that, he wrote, quote, nor does anyone else in Washington, unquote. Maybe, but President Joe Biden has not signaled that he cares to step in and save the stock market. In interviews, he and his staff have stressed the Federal Reserve's independence and expressed confidence in Powell's handling of the central bank, contrary to his predecessor. And politically, Biden's focus is more on prices at the pump, not the ones on Wall Street. In a recent Gallup poll, 4 out of 5 respondents said that they expected inflation to grow over the next few months. In another, half of respondents said that rising prices had caused hardship for their families. That's all to say that there is no one coming to save the stock market. There are no more stimulus checks, no more Fed puts, and based on Democrats' inability to pass Biden's Build Back Better plan, no more cash infusions coming from the federal government. The good news is that, inflation aside, the real economy is looking strong, wages are going up, unemployment is down. Ooh. Yeah, take that for what it's worth. That's the good news. Is that reality-based? Well, here's what it ends with. And a receding pandemic should help to clear clogged supply chains. Time out on a receding pandemic. As you know, we've covered COVID quite a lot at the channel. We are coming down from the peak of 1.5 million cases a day, but the cases are still at the same that they were at the peak of last winter currently. So that's the, quote, good news. Continuing, it's going to be a wild ride for Main Street 401ks for the next year or two, but if you can take your eyes off your balance and stay diversified, you'll recover. Wall Street's masters of the universe, however, face an extinction event. Hiking rates from their decade-plus doldrums is nothing short of economic regime change. The stock market we had before isn't coming back. It will take a year or two of the highs getting lower and the lows never bottoming before it's all over. After that, we'll be living in another world. In the meantime, get your bathing suits on and prepare for the washout. So that's the end of the article. Considering that the good news was stuff that sounded mostly made up, and the bad news was stuff that sounded apocalyptic, that's really cause for concern in my eyes. Anyway, I'm going to leave it there as far as the commentary. This is something kind of I just wanted to stick onto the bulletin board. We'll connect it with a thread later. But, you know, I want this on people's radars because it's been a while since a 2008. And, you know, we're due for something like that. Like I said, I think that this was supposed to happen 2019 into 2020. And they tweaked it, and we didn't get the big correction. And I think it may be coming sooner rather than later. This plus, you know, the whatever is going on with war between Russia and NATO, that's a real curveball that we could be looking at wild instability and violence out of the core of capitalism in the coming years. I don't have a crystal ball. I don't know exactly what's going to happen. But now is not the time to sit around. Get organized. I've been saying it at the end of every video for months. Join an organization. No, I do not endorse organizations, but join an organization that has gotten the line on various issues right, because you're going to be working with them in the future on future crises and future political questions. Something that's healthy. You know, people basically get along with each other and people aren't all burned out and stressed out and everything. Something that has ties to the community and that's doing real work. Isn't just like a bunch of isolated, terminally online people, in other words. Those are the kind of things that you want to look for. And if all you have in your area is DSA, join that. Be part of the left wing of your local DSA. Yeah, you might fight with the soc dems, but it's better than nothing. And you got to get out there, meet people, make connections, do the organizing work. We've got to get it done. Anyway, I'm going to leave it there for now. Thanks for listening. Leave a question or comment below. Thanks to the current patrons whose names are on the screen. If you'd like to get your name on the screen, head to patreon.com/socialismforall. You can sign up for as little as $2 a month or more. Every donation is encouraging. They're also materially helpful. So thank you sincerely very much to all the patrons, including a bunch of new patrons who recently signed up. Thanks again, and we will catch you in the next video.